Aloha, my name is Amy Bach, and I am so glad you were able to be with us today for today's free webinar from United Policyholders, the nonprofit that has your back when insurance matters. If you missed our orientation last month, you'll be able to watch it by going to our website and looking under events, and you will find the recording, or you can go to the library that we've set up for your region, which I will be showing you as we go through the slide deck. Tonight we'll be covering, actually it's not night for you. Today we will be covering how to read your home insurance policy, understand and calculate available benefits. If you want to follow along with the slides, you can just watch your screen, but if you want to have the slides on your own computer, this is how you can get to them. You go to our website, www.uphelp.org. You go to events, you go to today's event, and as you can see there with the arrow, the slides are posted and you can download them. So don't stress about if you miss a word. You'll be able to look at the slides later. We will be posting the recording and you'll be able to watch it. So just try to relax as much as you can and absorb the information that we're going to present to you today, and know that you'll be able to catch up later if you need to. United Policyholders is a unique charity. We are a not-for-profit that is a trusted information resource and a respected voice for people like you who have bought insurance all across the nation and all the states. We have a 32-year track record and expertise in disaster recovery and insurance and how it all fits together. The webinar that we're bringing you today is through our Roadmap to Recovery program. And that program is focused on post-disaster guidance and services with an emphasis on financial, insurance, real estate, and construction decision-making and emotional recovery. We're funded by donations and grants, volunteers, pro bono, which is a fancy word for people who give professional services for free. You can't hire us. Our services are free, but they're limited. Team Up, as we call it, is our professional staff, our government and nonprofit partners, and our volunteers. Our volunteers include people who've been there, done that, walked in the shoes you're now walking in, lost a home in a wildfire, or had their home damaged in a wildfire, navigated with help from our organization and our partners, and are now paying that forward by being helpful to you and other communities that are similarly struggling after a catastrophe. Some of our volunteers have been on the island since right after the devastation, and they've been there. You may have met some of them. We've had tables at various events, and we've been continuing to provide services virtually for the last few weeks since we brought them back to the mainland. We also have on our team consumer-oriented professionals, policyholder lawyers. Those are lawyers who specialize in insurance and counseling insureds, the consumers, the buyers, public adjusters. Some of you may now know about that profession, this type of professional who specializes in representing people, being their intermediary, their representative with their insurance company on a claim. We also have a lot of tax and financial planning experts in our volunteer corps, and then people who know a lot about construction, estimating, real estate. A few reminders, we're just giving you general guidance here, not legal advice. If you have a specific legal question, we recommend you consult an experienced attorney. We don't endorse or warrant any of the sponsors listed on our website or our speakers, but of course, we try very hard to bring you the most accurate and easy to understand information, and through our staff and then volunteers that we have a measure of trust in, because of their work that they do, their expertise. So when you want to find out about what events we have coming up or events we've had in the past, you go to that same place where you found the slides, and that's where you can see the recordings. This is the library that we set up for your disaster. And I know that almost at every meeting where somebody speaks to you, they say, we're sorry for your loss. And sometimes I forget to say it because it's what we do and why we do it. We have very, very deep empathy and a very unique understanding of what it's like to be affected by a wildfire and all the disorientation. But I feel I should say it anyway. We are very sorry for your losses and what brought you here today, but we are so proud to be bringing you 32 years worth of experience in helping people in your situation. And we thank you for your time. This library is going to be there for you. It's there 24/7. We are updating it all the time with current information and resources for you. You may have seen this little yellow book. If you would like a copy, you just email us, info@uphelp.org. As I mentioned, this program through which we're bringing you this information consists of webinars like this, workshops, clinics. We're going to be doing an insurance help clinic with attorneys and other professionals in November. So hopefully you're registered to get notices from us and you will get a notice about it. But I encourage you to visit the library on a regular basis so you can stay informed as we add new information. We offer, like today, we're talking about how to understand your policy and what's in it. Down the road, we'll be talking about how you figure out whether you want to rebuild or whether you want to move. We will be talking about filling insurance gaps, financial gaps that you have. Most wildfire impacted people find that they don't have enough insurance to put their dwelling back. So we will identify some of the strategies that are available for taking out loans, getting charitable aid, what the government programs are to help you get back home. We will bring tax experts to talk about helping on your income tax filings and what kind of special rules there are that the IRS offers to help casualty loss victims. So we'll be talking about all those things in the months and years ahead. Like I said, our website is there for you all the time. Not just the library we set up for the Maui fires, but also all the other materials that are there on the website. Sample letters, links to professional help. Our Survivor Speaks tips. Those are tips that are written in the words of people like you who've been there, done that. And then the events that we've got coming up. So just a few reminders before we get into the meat of today's program. Wildfire recovery is a process and you have to take it one day at a time. Otherwise, it's completely overwhelming. We recognize that you have had a steep learning curve from living your life as it was to suddenly having to learn about things like insurance and debris removal and all the other things that are in front of you and around you. Because we have so many people on our team that have personally gone through it, we really recommend that you do take it one day at a time and recognize that you are probably not in the clearest head. Most people find they're not sleeping normally. People talk about brain fog. And so we really remind you to be kind to yourself and just one day at a time. So I'll be talking to you a little bit more throughout the program, but the main instructor you'll be hearing from is my great friend, Sandy Moriarty. Here's a little bit about me. I've been a consumer advocate for my whole career. I'm also an attorney. I'm one of the authors of that little yellow book. My life's work is to stand up for you, the person who has bought insurance and needs to get treated fairly by your insurance company. And that's what I have dedicated my career to. I'm one of the founders of United Policyholders. Sandy is expert as you're going to find on insurance. She worked for many years for insurance companies. She has worked with and for United policyholders. She's got more certifications than I can list here. And suffice it to say, the woman knows her stuff when it comes to insurance, wildfire damage, and wildfire recovery. So a few more reminders before we dive in. Insurance is a vehicle to get you back as close as possible to where you were before your loss, but it won't drive itself. So we like to remind people that you paid for coverage and good claim service when you bought insurance. We're here to help you get both. But the reality is you have to be proactive. We really encourage you to keep a journal. Any old notebook will do. Just helps you, especially when you may not be thinking as clearly as you normally do, to keep on track. Very often you will be dealing with not just one adjuster from the insurance company, but a series. You know, the first adjuster that you may have contacted you usually will cycle out and somebody will replace them. And to avoid having to start anew or reopen things that you thought were already settled, it's a really good idea to keep a journal and have a paper trail of how the insurance company is handling your claim, which we expect to be fairly. That's our goal, is for you to be treated fairly. So we're going to be talking today about how to understand what your policy provides and how to understand the math and rules on how much you can collect from your insurance company and when they should be issuing you benefit payments. Now, because we have had staff and volunteers on the island from basically the beginning, we are very up to speed on what's been going on. We know that a lot of you have been solicited, that people have been offering all kinds of help, mostly paid, some free. And there's lots of great people involved in the Maui recovery effort, the wildfire recovery effort, but there are also lots of people who come in to make money in the aftermath of a disaster. And it's tricky to know who you can trust. But I can assure you, you can trust us because we're not here to sell you anything. We are here to give you the straight scoop. So thank you so much for your attention and time. And I'm going to turn it over now to Sandy.
Let me unmute myself. Thank you very much, everyone. Thanks for being here and taking time out of your day for this. Hopefully we're gonna, the purpose of this, as Amy was saying, is to help you sort of make some sense out of these insurance policies. They're really complicated and they are not not easy to follow. So we're going to step through it on a fairly high level basis, but this is going to give you sort of a map of how you can step through and read your own policy. And one of the things that I like to point out at the beginning is be careful when someone tells you that they had this part of their loss covered, and why haven't you had your part of the loss covered, or this or that. You'll hear a lot of stories from a lot of people, and while there are general things about insurance policies that are kind of all the same, there are a lot of little differences. So a lot of times, if your neighbor has a policy that's different than yours, don't assume that you have that same coverage or anything like that. So it's really important to read your individual policy. Okay, so on that, the first thing we recommend always is to get a complete and current copy of your home insurance policy. Usually the easiest way to do that is to, if your adjuster is not helping, sometimes they will get it, sometimes they won't. Go to the agency that sold you the policy. A lot of times they can get it for you. A lot of times when I ask for someone to send me a copy of their policy, they end up sending me what we have listed here first, the declarations page. And the declarations page is like a summary page that, lists how much the policy is for and what it covers and what kind of coverage you have. But there's also usually a big mumble jumble legal document that goes along with it. So make sure you get the full copy, and then we recommend making a copy of it and using that so you can mark it up and write notes and remind yourself. And, okay. So one of the things that we want to point out is that renters policies and homeowners policies are very similar. So a lot of this applies to both. The big difference being that the renters policies don't cover the structure. Okay, they don't cover the exterior or interior. They don't cover the building. They cover your stuff, your contents. So the obligation to fix your property, if it's, you know, where you live, if you rent, is the landlord's responsibility. And in a case, if your building is still standing and you need it, you know, it needs to be cleaned because there's smoke inside, then you really need to coordinate with your landlord on the building cleaning and the contents cleaning. It's best to coordinate those and do them at the same time, or have the building cleaned first and then your contents. And then also if you're living elsewhere, a lot of times the adjusters will bring up you know, the time involved, and so just remind them that you're not fixing the structure, so it's not in your control. Okay, so declarations page. No, we're going to show you some samples. No, they don't all look the same. In general, though, they should contain the same information. Who's the policyholder? That's you, the insured. The location of the property, the effective dates. They're usually a year long on these types of policies, and so as long as your loss falls within that period, you know, you have a policy in force. It lists your coverages, your limits. There's things called riders and endorsements that kind of can add coverage or take away coverage. Has deductibles, and then if you have a mortgage company or lender on your property, then there'll be some language about that. Okay. Okay, so this is just a sample of a policy. This is a Hawaii policy that we received. So just to show you some kind of what this looks like in terms of your coverages. A lot of times they name them coverage A, B, C, D. These are the different things. The dwelling, that's the building, the home. Other structures, that would be like your garage. If you have a detached garage, it would be something detached from the main house, okay? Personal property, so that's your contents. Everybody talks about, you know, turning the house upside down and shaking it. Anything that falls out would be personal property. And then loss of use, okay? That's to pay for your living expenses if you're displaced because of the fire. These down here are liability coverages. They don't really apply to this, but they're important to have. Okay, so this slide talks about all the different things that are involved in the policy. So the definitions, you've got an area of your policy that defines certain terms, okay? And you'll see it later, we have a slide on that. If a term is in bold, it means that you can go back in the definitions. It means it has a really specific definition for that policy. And that definition, like if it says building, you know, there's a general definition of building, but the definition for the policy is usually more specific. Some of them say, you know, building, not including the foundation or things like that. Okay, your coverages, that's what's covered. Additional coverages are little add-ons that we'll talk about. Losses insured, and the good part about this is that fire is insured, so we don't have to get too deep into losses insured and the exclusions, because there shouldn't really be any in this case. Fire is a covered peril under most policies. Loss settlement provision is how they pay your claims, and then conditions talks about how they do things, and then certain things that you have to do. So we'll talk about that a little bit. Okay. Yes, deep breath. There's a lot to this, and I apologize. You know, I get the fun job of the really, you know, explaining insurance is not something that people sign up for voluntarily. So we appreciate it. So these are the buckets of coverage. This is sort of what I showed you on the page, that sample piece of the declaration page, the dwelling, all the different parts, and the ABCD. Know that if you have State Farm, there's a little bit different label. State Farm has dwelling and dwelling extension. They call it dwelling extension. both under coverage A, and then contents under coverage B, and loss of use under coverage C. Most of the other insurers have it the way it was listed before. Renters policies are the same, no coverage A. So here's another example. Yeah, no, that's fine. Mobile homes are basically the same too. Thanks. Here's just another example. This is another form of a declarations page. Usually your coverage A is the highest amount. Okay, so these are examples of how they define, like, see what I was talking about, the bold dwelling. So dwelling is defined in the policy, and this kind of talks about it. So there's certain things like this one, the foundation and the slab, they're included. If you've got like building materials there, it's included. So you just sort of have to look. It generally covers the house, and we go from there. Thanks. Okay, other structures, we talked about this. This is a dwelling extension under the state farm policy. It's usually about 10%. Some companies let you buy more. Most of the policies say it has to be a separate dwelling, separated from the main structure by clear space. So you have to look. This is one of those things where there's different things. Some of them require a roof, some of them don't require a roof. Some policies call other structures retaining walls. And so this is one where it really varies in your policy. So if you have other structures on your property, make sure you dig into that a little bit and see what's going on.
So Sandy, a deck, if it's attached, is going to be part of the dwelling, right?
Right. So a deck, if it's attached in your house, like in my house, you can just walk out, and that would be part of the dwelling. And some policies, like if you have a deck like over here and it's not attached to the house, that would be another structure.
Okay.
And this is just an example of where to look for your coverage. And you have to look. The retaining wall gazebo thing is definitely different. So these are just examples of definitions of separate structures. Okay, and these are, it gives you an example. So I would say this is one of the most variable parts of a policy. Okay, so make sure you find that and look. And it can also be called, if you look on the left, dwelling extension. That's a statement.
Sandy, sorry, I know a lot of people, as I said earlier, 2/3 of the wildfire impacted households we've surveyed over the years did not have enough insurance on their dwelling. And sometimes people need to argue that they want to take some of their other structures benefits and use them towards their dwelling. So if you look at these three, you can see that there could be different arguments that you would make, right?
There are, and it's, one of the things, and that's good to remember, is you can always ask. There's certain things that are sort of on the fence with this other structure. So if you like rent out of dwelling coverage and there's like a question whether, I've heard people, the deck question that you ask, their deck actually wasn't attached to their house. It was actually a little bit apart, and the adjuster had counted it as dwelling, but when you got to the nuts and bolts of it, it wasn't attached to the house. So, and then sometimes this is, if you have an insurance company who's a little lenient with you, you can argue, hey, look, let's put this over there because this carport isn't really attached, or something like that. Always ask if you need the coverage from somewhere else. Okay, so this is contents. This is showing, we talked about, what your contents is, your personal property. Also, remember that things that are outside, so your patio furniture, and your barbecues, things like that, those are also considered personal property. So those things are covered as well if you lost them, and it's part of your contents loss. Okay, this is you're covered. Some policies do have a little bit of coverage if you had someone staying with you at the time and they had, say, a bunch of luggage, or I don't know, their bicycle or something at your house. Some of the policies cover guest properties if the house burned while they were staying with you. So you should look into that. And there's a lot of things in the contents coverage that are subject to specific coverage limits, and we'll get into that a little bit as we go along. or right now. So these are some of the special limits. And we have ranges because different policies have different amounts. So money is usually limited, you know, actual bills. Securities, which are like stocks and bonds and you know, little clip of coupons that you keep. Business property, that's kind of a big issue now after COVID. How much business property, but be prepared if you use it entirely for business, it might be limited. Watercraft, and there's a lot of limitations on like what kind of watercraft they cover. They're a little bit different, but if it's like a little low horsepower motor, it might be covered, but if it's a bigger watercraft with a bigger motor, it might be completely excluded from your policy. Trailers to carry those watercraft or other cars or something like that are also limited, and then computers and electronic equipment are also limited. In general, you'll see limitations for jewelry and firearms, sometimes furs. I guess not a lot of furs in Hawaii, but those limits that are in the policy generally don't apply to fire. They're theft limits because they're generally items that are sort of easy to steal. So usually there's not limited by it for fire. These are items that are specifically not covered. If you have a separate policy, some people like have high value jewelry or something like that, or art, and they have a separate policy that wouldn't be under your homeowner's policy. Animals, birds, and fish are generally not covered. If you have a tenant who pays rent to you, their personal property is generally not covered. Motor vehicles, cars. If you have like an ATV that's only used on the property, sometimes those are covered. RVs are generally not covered. Just be aware of that. Okay, so additional living expenses and loss of use. This is also pretty highly variable. So you can have the coverage, the additional living expenses pays for your increased cost of living to maintain your standard of living while you're displaced. And there's different names for it. She's got them listed here: loss of use, additional living expenses. You'll hear ALE a lot. And then temporary living expenses. You can have like a money limit, a time limit, both. Some policies don't have a money limit. So you have to really look. There's a couple policies out there that don't have a money or a time limit. So check your policy for that. And your language determines how much you're entitled to. And there's different ways to calculate it. If you've lost your home, and some policies will pay the fair rental value. So if before the fire you could rent your home out for, you know, X amount of dollars per month, they'll give you that amount toward living. Or if you can find a comparable home to the one that you used to live in, then it would pay that rent. Some of them say that they'll pay the actual loss sustained, which means you actually have to spend the money in order to get it. You'd be reimbursed. So there's a lot of variables here as well.
Yeah, and we've seen this shift a little over the years. You know, in the past, insurers would generally only reimburse you for you'd have to pay for your extra gas, your temporary rent, and then submit receipts to get reimbursed. But there's been a lot more pressure, some of it brought by our organization, to get insurers to advance ALE funds to you. And we're seeing a little bit of that. We got a question, Sandy, and we may be answering this in the next slide. But if our loss of use of insured location doesn't have a maximum, but says actual loss sustained, what does that mean, and how long can we expect rental assistance?
Actual loss sustained usually means that there's no monetary cap on the policy. Some of the State Farm policies you'll see have this actual loss. Their new policy, they've gotten rid of that, but there's also some Liberty and other policies that have that. And so it's the cost that you actually incur. So whatever it costs you, they'll pay that. Now, a lot of them do have a time limit associated with that. So you need to look and see, so they'll pay the actual. So if you, end up, it's going to cost you, $20,000 a month to live in a comparable home, they'll pay that additional amount. It's not limited, and you're not going to run out of funds. If you remember back to the declarations page, there was some money limit there. And if you have a money limit, you sort of need to figure out how much you pay every month in your living expenses. And if you're paying, like, say, $2,000 a month, you need to figure out how many months that's going to take you through. Because even if the coverage is for a home to maintain your former standard of living, it could be that you're willing to live in a little smaller place for $1,500 a month, so that you can take your bucket of money and make it last a little bit longer. So there's some real decisions that need to be made when you're
budgeting, right? Budgeting to stretch your dollars.
Exactly.
So we know, before we get to this commissioner memo, I wanted to ask you, Sandy, we know that a lot of people go and stay with relatives, would rather stay with a relative or a friend rather than staying in a hotel or a rental for a period of time. So what is the best way to present to your insurance company a request, since you're not actually spending money on rent, but you don't want to leave money on the table? What can you do in that situation where you're not actually paying rent?
Well, or you're not actually paying rent, or you could, some people like enter into informal agreements with, their relatives and say, okay, well, my brother lives, 5 miles away and they have an extra room. You can, negotiate and say, well, I'm going to pay my brother, $600 a month and rent that room. And you can, you can write that up and submit that. You can do it that way. I think that's the easiest and cleanest way. Make sure that you tell the insurance company that you're related to the people. If they're your friends, you can do the same exact thing and say, look, I have this coverage, because you're not taking away from another coverage. So keep in mind that you might need it later, because if it's going to take 2 years to rebuild your home, you might not want to live with your brother for 2 years. So you want to be mindful of, where you're spending it. But you can do that. You can also like pay for groceries, increased groceries and things like that, to help the family so they don't maybe have to feed you, things like that. The other thing that's really important is, don't push back if you're getting some problems over if it's a second home. I know that in Hawaii, there are a lot of second homes. You're still in most cases entitled to maintain your regular standard of living. So if you say you live in Hawaii and you have a house there and you live there most of the time, but you have one maybe in California, don't let the insurance company tell you that they don't owe you money because you can just go live in California. You're going to need to spend some time on the island and to do that. And so I've seen a lot of pushback in the recent years, and just be mindful of that and look at the policy and make sure that they should pay you for that as well.
So Sandy, the fair rental value, so that option to say, if I had been renting my home that was destroyed, I would have been able to charge X dollars in rent. Therefore, if I'm staying with a friend or relative, you can make a claim for that, what your home would have rented for, even though you weren't actually renting it out. Do some policies have language that's more helpful to making that argument?
There's some policies that will give you the option of choosing between getting a fair rental value or paying for what you're actually, they call it an incurred cost, and what you're actually spending. Some policies, like the State Farm policy, says costs actually incurred, which means you have to spend it to get reimbursed. Ask ask, because sometimes they will, even if it's not in their policy, They might negotiate with you. I'm not really up to speed on the housing situation in Lahaina and how difficult it is to find replacement housing. Sometimes in locations after a wildfire, it's really hard to find housing. And so, you know, if you're going to incur costs, you know, you might have to drive a long way away. Just ask them to work with you. I think that's the main thing to keep in mind. And some policies have it and some don't, but even if they don't, it's okay to ask. It never hurts to ask for anything.
So we got a question from Douglas. If my brother receives rent money from me, does he have to declare it as income? Does that depend on the state he lives in? That's a great question. We're not here to give tax advice, so I'm going to ask you to either you can put that question into UP through our Ask an Expert forum, or you can check out one of the recordings that we've offered from tax experts. I don't know the answer to that question off the top of my head, and I'm going to guess Sandy is going
I
to
think it's yes. I think it's probably yes. I think it depends on the amount.
probably yes, but
Mhm.
okay. So you can see here we reference an insurance commissioner memo. Most of your policies are going to have either 12 or 24 months, 1 year or 2 years of this bucket of coverage, this temporary rent, ALE, right? That clearly is not going to be enough for most people to be able to rebuild, replace their home, and reach a fair settlement, full settlement with their insurer. So your insurance commissioner, Ito, did issue a memo fairly soon after the event, asking insurance companies to voluntarily agree to extend, if you need it, your temporary rent and ALE coverage, additional living expense coverage, for up to 36 months, which is 3 years. Now, many states, not many, but a number of wildfire states where wildfires are common, California, now Oregon, and Colorado, have changed their laws to require insurers to provide up to 3 years, but you don't have that law yet. So your commissioner is try to do you a solid by asking the insurers. But just to be clear, it's an ask. He does not have the legal authority to order them. But why we mention it is that when a public official like him puts out an official bulletin, which is what he did, this memo, you can use that bulletin in when you're arguing with your insurer, when you're presenting your reasons why. Now, obviously, you know, on one level, you don't need to be worrying about this now, but you may be worrying about it. So what I'm here to tell you is you have this bulletin, you have a sample letter on our website that you'll be able to use if you only have 12 months. Next year, when you get towards June, I would say is if it's absolutely clear that there's no way you're going to be able to have replaced your home by the anniversary of the fire, and you only have 12 months, that's when you're going to be using this bulletin and our sample letter to explain to your insurer why it was impossible for you to replace your home. So back to you, Sandy.
Great. This is a slide that talks about the difference between additional living expenses and fair rental value. And this is a great question because we got a little question on here talk about the loss of rental income. About the same. You have to look at your policy, but ALE is definitely the increased cost to maintain your standard of living. Fair rental value, and this applies to the loss of rental income as well, because many rental policies talk about fair rental value. And that is the amount of the fair rental value of the home you lost. So if the home was standing right now, figure out what it's like a comp on a real estate appraisal type of thing. Figure out how much it would have rented for if you rented it right now. That's fair rental value. That's the same for loss of rental income. Most of the loss of rents coverages talk about fair rental value. Be careful, because sometimes you're renting, like say you're renting, I just had one where somebody was renting their house to their daughter and son-in-law, and the daughter and son-in-law were trying to save money to buy their own house. So the dad said, okay, I'll rent you my house, my extra house, for half of what it would go on the market. You guys can save up your money and stay here for X amount of time. Well, when it burned down, the insurance company said, oh, well, you were only paying, $3,000, and this is a $6,000 house, and we're going to pay you $3,000. The coverage is fair rental value. Okay, so words matter. It doesn't say what you're renting for now, it says fair rental value. So that's that. Check your policy. If you don't have fair rental value on your owner occupied buildings, ask for it. Okay.
And sorry, Sandy, and Doug is asking if we have to rent elsewhere, can that be on the mainland? Could it be in Europe where we have family?
Yeah, in general, yes, you can. In a lot of cases, you'll have to show that it's a similar price or less than what they would pay to have you living on the island. But it doesn't, there's nothing in, I've never seen anything in a policy that says it has to be in the town or island or country that the loss happened. It's your increased cost to maintain your standard of living. So, but I've seen people have better success with it if the amount that they're claiming is, you can't, they're not going to pay more for you to live in Europe. That's the long and short of that.
Yep.
Somebody's asking if there's any room for negotiation of the various coverages listed on the declaration page. No, they don't negotiate the limits. They might negotiate some of the terms, only a few. I'd say fair rental value is one of the ones we've seen negotiated. But maybe a term, maybe, we talked about negotiating that. Are we going to put it in the other structures or in the dwelling coverage? You might be able to do that. But those coverage limits are the coverage limits.
Right.
Okay?
But I do have to throw in the caveat that for those of you who are either thinking or are fairly sure that your dwelling was significantly underinsured, we have a whole we have class that we teach on remedying underinsurance. We have materials on our website for making arguments if the circumstances are that you actually had a conversation with your agent or with the insurance company before the fire, during which you asked them to assure you whether or not you had adequate coverage, and they assure you that you were. If you have proof of that conversation, it's a different scenario. But as Sandy said, that doesn't mean that you can be in this right here where you are now on your own trying to renegotiate those policy limits. They are set in stone, but by making legal arguments based on evidence you may have a shot at getting them to retroactively reform those limits. But we're not going to really be going into that today. We're sticking with how you figure out how much you're owed.
Yeah, and we have a couple questions here on how to come up with fair rental value. I think the best way to do that is local realtors. Local realtors, people use Zillow, they use, Craigslist or whatever. You can do things like that to come up with it. Local realtors. Some of the, there's companies, and you guys probably have already come in contact with them. There are companies that insurance companies use to kind of help with with finding houses. Sometimes they can be of help, but be wary, be aware of who you're dealing with. But I'd say people who place like corporate executives or things like that, depending on your home, there's different ways. But I'd say local realtors, Zillow, Craigslist, things like that.
Okay.
And look for a house that has what you have. Like if you have 3 bedrooms, 3 baths, and a swimming pool, you're technically entitled to 3 bedrooms, 3 baths, and a swimming pool. So, okay. So, what are you owed? You're owed the increased cost to maintain your standard of living. Okay, that's what I was just talking about, swimming pool. How long? The shortest time to repair or replace, or for your household to settle elsewhere. If you buy a replacement home and you move in there, that ends your living expenses. If you repair your home or rebuild it, that ends your living expenses. And this is assuming, you've got the time limits in the policy, the 12 or 24 months. This is a list of things that qualify. Ask your adjuster to send a copy of the list. It's required here in California, but I don't believe so in Hawaii. But most insurers will have a list of what qualifies. So rent, because you still have to pay your mortgage. So the increased rent, if you have to buy a policy, some insurance policies will cover your temporary location. Extra mileage, so now you're living out of town by 20 miles and you have to take your kids to school, so that would count. That's increased. Count setup fees, get your internet hooked up, all of that stuff, photocopying to do things, moving costs and pet boarding costs, things like that. Okay.
Covered.
We've talked about this. These are just some little other things to think outside the box. If you want to try to negotiate a lump sum, if you want to try to purchase, a lot of people, like in the Paradise Fires, bought fifth wheels. I will say they get old if it takes a really long time. And some people that I talked to later kind of think about how long you can live in an RV. That's all I'll say about that. But tiny homes or temporary dwellings. If you're going to buy a temporary home, some people do that. Talk to your insurance company first, because I have seen them push back. And people go out and buy a house because they want to get it because there's a limited supply. They buy the house thinking that the insurance company will pay the rent, and they're like, oh no, you just bought a house, so we're not going to pay for that. So make sure you know what's going on there.
Okay.
And we're close. We're about 10 to 4, so I'll have to speed it up a little bit, unfortunately. And these are additional coverages that are little add-ons to your policy. Debris removal is a big one. Most policies have 5% additional coverage for debris removal. You've got and we'll get to that, tree, shrubs, and plants, and then temporary repairs. This is debris removal. I know we have a slide on the consolidated debris removal program that's being coordinated. In general, I think we've seen those work out fairly well for policyholders. Take photos, see it. If you see things that are recognizable, try to take a picture. And then the way it works is they pay your debris removal with your house coverage until you hit the limit of your house. And once you hit that limit, it adds another 5% on, and they move that. It's so complicated, but they move that debris over into another bucket. Most of the time it excludes coverage for trees, shrubs, and plants debris removal. Sometimes there's like a $500, but you need to look at that.
And what we do recommend, if you're doing the coordinated program and your insurer has issued you some payment toward your debris removal bucket of coverage, that you hold that money as best you can aside and don't use it until you're all square with the county program and what they might want to recoup.
These are just examples of policy language. You need to this is just mainly so you know that they're different. We can keep going. Read yours to find out what you have, or ask somebody to help you.
And then I think the reason we had these two is that this one has the additional 5% of your dwelling coverage on top of, right, Sandy, and then the other one is inside of, right?
Yeah. So this is the first two there were ones that added the 5%. This is a policy that doesn't add the 5%. So what you want to look is, does it say, this one says this expense is included in the limit of liability that applies to the damaged property. So you get some debris removal, reasonable expenses for your building and for your contents, but it doesn't increase your coverage limit. The others can increase your coverage limit by 5%.
Right, an additional 5% in this one, and in this one, it's not. And here's your, which hopefully you all know about this website, Maui Recovers, and where you can get updated information on the coordinated, or they're calling it consolidated debris removal program.
And Andre's asking about how does the 5% additional work with the consolidated debris removal program. I haven't looked completely in, but in general, and each program is different for each wildfire. They'll tell you, but most of the time they'll say set that 5% to pay us back, and that's all you would owe them. But you need to work with the program to find out what they want, because it's different for every program. This is tree, shrubs, and plants. Just know sometimes this adds an additional 5% of coverage. There's usually a per tree or limit. It covers, fire damage to your trees. But if you have like a heritage tree or something new, you're probably going to be limited to 500 or 750 per tree. And then you need to cross-reference with your debris removal, because there's differences in whether your debris removal includes tree and plant debris removal. But this also includes lawns and stuff. So, and these are examples of policy language for different policies. These are a Liberty Mutual and a farmer's policy. And each policy says, what they are. Some policies are saying, we don't cover fake lawn, different things. So you need to look and see what yours says. Okay, these are available benefits. So know that this is where you can find some extra coverage. This is the base limits here up at the top. But then remember at the beginning, we talked about endorsements, and endorsements can add or take away coverage. A common one that I have circled here is extensions of coverage. A lot of times there's something called extended replacement costs that will add to your coverage A, and sometimes other structures limit. So you need to be on the lookout, and these list of endorsements are long and crazy, but you need to look through them, because a lot of times there's some extra hidden money or maybe something taken away. This is just an example of doing the math. When I was talking about the extended replacement coverage, and we have some other slides, State Farm calls it option ID, increased dwelling. They can be like 5, 10, 25%. And this is just talking, if you have coverage A limits of $500,000 and you have extended replacement coverage, which is the option ID at State Farm, that you get another 25%. If you run out of the 500, they'll give you another 125. There's some differences in when they pay it, but in general, you could get that. There's also code upgrade coverage, and we've got some slides coming up on that. Add your debris. This is just sort of how to do the math. Okay. Terms and lingo. So one of the things you'll hear a lot about is replacement cost versus actual cash value. Replacement cost is what it sounds like, the cost to repair or replace the damaged property. Actual cash value in most cases is replacement cost less depreciation. There are some places where it's fair market value, but in general, it's replacement cost less reasonable depreciation. And a lot.
Oh, I'm sorry. I was going to try to get to the barrel slide, but we're not there yet. Okay.
So your loss settlement provisions and the endorsements talk about that. Most policies will pay you actual cash value up front, and they'll pay you the rest of it, up to the replacement cost or your policy limit once the repairs are done. And then these are coverage extensions. This is how to look for whether or not you have. This particular slide is about extended replacement costs. And if you look sort of on the left, that's a State Farm policy with the highlighted where it says, yes, you see increased dwelling up to 93.9. And you've got your ordinance or law there. The second one on the top right, it says maybe, so it says replacement cost, but we have to read the endorsement to know what that means. Is it extra? Is it not? And then the third one is like, look for things like Home Protector Plus, also look for like Hawaii specific. There's a lot of state specific endorsements. So look for those. And if like this Home Protector Plus actually does add extended replacement costs, but you wouldn't know it by reading that. So it means you need to, if you can't identify what that endorsement says by like saying, for instance, workers' comp coverage, right? You don't need to really read that for this. So if you can't really figure out what it is, go read the endorsement.
Okay.
Actual cash value. This is, so each policy sort of talks about how, how they settle things. Some things like awnings, different things, sometimes you don't get the full replacement cost. Roofs and awnings and fences are the three most common things that they won't pay replacement cost. They depreciate it and pay you that depreciated amount. Okay, this is just this is the same policy. So this policy looks like an actual cash value policy, but here's an example of adding an endorsement on that gives you replacement costs. So it's they really need to make these easier to read, but here's an example. Okay, this is what we talked about, actual cash value paid up front with the replacement cost once your repairs are completed. Doug is asking, if you lost a one-story home and want to build a two-story home, are you allowed to use the money?
I'm answering it. It's
okay.
Okay.
Oh, okay.
I'm just worrying about time.
Oh, okay. Go ahead.
Yeah. So do we cover ACV and then?
Yep, we did that.
Okay.
These are just endorsements. This is just explaining endorsements. They're listed. They're very important. They modify your coverages. And we've kind of talked about that. This is an example of a replacement cost. This is a Hawaii policy. So specified additional amount of insurance. So just be on the lookout. Okay. And this one's a percentage. This person didn't have it. If it's blank, you might not have it. Talk to your agent. This is an example of what to look for. Okay, these are additional funds on top of your coverage A. Look for extended replacement cost. Sometimes they only apply to coverage A, which is the house. Sometimes they apply to all three. These are examples. It's kind of the same slide, just rearranged. Sorry, we did that twice. Here's a sample endorsement just so that you can see extended replacement dwelling coverage amount. Just an example. Okay, code upgrade coverage. Most policies have about 10%. Some of them have a lot more. It pays for upgrades that you're required to make. Like sprinklers are a great example. You didn't have sprinklers. Your house burns down. They require you to put sprinklers in. That's an upgrade. Okay.
Not all policies have them. You may not have a code upgrade endorsement, in which case that's going to be a gap.
These are just examples. State Farm calls it option OL, building ordinance or law. This is a State Farm example. Okay, some pay for undamaged portions if you've got a partial loss. So look and see if you need that. It's pretty rare. But go ahead. This is another example. These are just to show you kind of how they look.
Well, this has to be a quick, deep breath.
Yeah, we're getting to the end here. Sorry.
That's okay. It's all right. No, it's okay. We can go a little over. It's fine.
So this is just, your flow of insurance funds. Some of you may have already received advances for different things, living expenses. Some insurers come and say, okay, here's 30% of your dwelling up front because we know your house burned down. Then they should estimate your house and pay you the actual cash value up front. And then once you replace it, no matter what you replace it with on that previous question, it doesn't really matter. You just have to spend the money. Okay. And once the repairs are completed, they pay you the rest.
Here's the barrel slide, I think illustrates it pretty well.
Yeah. So you take the full replacement cost, which would be the whole barrel put together. You subtract out the depreciation. That's your actual cash value. If you have what's called an ACV policy that only pays ACV, that's all you get. But if you have replacement cost, you get that other part of the barrel paid, and there is a UP publication on that.
So while Sandy's reading the question in the Q&A, I can go over this. This is some guidance that is just based on what has helped some folks in the past. Opening a separate bank account from your normal bank account just for your insurance funds, keeping track of the insurance checks that you get, the payments you've received, and then the expenditures you've made, keeping track of what bucket of coverage each of the payments came out of. We've helped get some laws through in some states that require the insurer to tell you which buckets, and give you that recap, but I don't think Hawaii has that. So again, you just ask for what you need, but also do your own tracking, your own journaling. And here is an example of an insurance accounting spreadsheet that and a drawdown spreadsheet that one of our volunteers created and donated to us that might be helpful to you. You'll find it on our website at that link. And again, this is just to help you keep track of the money and the flow. And these are some of the samples and examples that you'll find on our website. Now, the example that we got here is a letter that you can use to ask your insurance company for copies of claim related documents. And by that, we mean if they had somebody out at your lot and doing any kind of measuring, or they have told you what they think it would cost to put your home back, stick for stick, board for board, stucco for stucco, however it was made, and they've given you some kind of a lump sum and you want to understand how they got to that math, this would be a letter to send that you customize and send to them saying, please share with me any measurements, any reports, any calculations, any estimates you've done about my place and how much it would cost to put it back. You don't have, there's not a legal requirement on the books in Hawaii that they give you that breakdown, but that is, in our view, that is your insurer's obligation of good faith to be to work with you, to be cooperative with you, and to keep you informed. So, but this is just one example. You can see we have sample letters for requesting a copy of your policy, sample letters for asking them to cash out your contents coverage. That's something that a lot of people try to do. They say, look, this inventory, itemized inventory requirement is just brutal. I can't deal with it. Can you max me out? As some insurers have done and sometimes will do. They're not legally required to do it, but if you give them good reasons why they should do it, such as trauma, and if you have somebody in the family who's got any kind of illness or disability, or if you have young kids, or whatever your reasons are, you lost a family member or friend recently, those are all really compelling reasons why you shouldn't have to do the itemized inventory. And there's a very strong argument that you paid for contents coverage, and now all your contents are gone. Sorry about that. And you shouldn't be required to do the inventory. Those are the reasons that you can give. And these are the sample letters to help you make those arguments. It's our view that time is on your side. The longer your claim stays open, the more in general you're going to collect in benefits. You should ask for extensions and advances when needed. There's never any harm in asking an insurer for some flexibility. As Sandy was talking about, if you want to buy an RV so that you can live on your lot while you're figuring things out instead of paying rent, that is a totally reasonable request to make. And that's something that insurers have often agreed to do. There's no harm in asking. The only downside is they say no. And I want to remind you that you may think, and maybe there are folks telling you that they already know how much it's going to cost to put your house back and or replace everything that you lost. But for most people, it really takes time to tally up everything that you lost. And when you rush it, you're going to leave things out, and we don't want you leaving money on the table, because if you are like most people, you're going to need every dime of available insurance benefits to get back on your feet. I want to remind you to stay informed, encourage your friends to email, to know about us, tell people about us. Let them know that they can register with us to get notices when we're going to offer a webinar like this, or the clinic that we'll be offering next month. Follow us on social media. where we will post things. And one of the things that we offer that is very helpful for a lot of people in navigating the emotional challenges of the trauma and the loss, and the unique feelings that you have in this situation, is that you can participate in something called Survivor to Survivor. We've got S2S, Survivor to Survivor. These are web-based. It's just like this. You would log on with a link, and you would be in a community with other people in your situation, and our trained volunteers who have gone through their own wildfire recovery to just talk in a confidential setting. We don't allow outsiders to come into these forums. So you'll find out about when we have our next one coming up. We've already done 2 for the Maui wildfire. And you can sign up at our website and they are free. Here are 2 of our volunteers, Annie Barber, who lost her home in the North Bay fires in 2017, north of San Francisco. On the bottom there is Lee Candelas, whose home was severely damaged in a wildfire in Colorado in 2013. Both of them traveled to the island as soon as we could get them there to be there with you. And I know I think Lee's already come back. She's got family there. She grew up there. And Annie is very much wanting to go back because our hearts are with you. And our minds are with you too. So this is only really the second in a series that we are planning to be offering of this kind of webinar, where we will be giving you information, we will be answering your questions. This is the last chance to ask any questions. We've got maybe a minute or 2 left. And Sandy, was there anything else that you wanted to add? Otherwise, I want to say mahalo for your time.
Yeah, depreciation is one thing you can negotiate. Ask them to explain it. And if you disagree, put it in writing and you can negotiate depreciation. If you have something that was in really good shape and they applied a really high amount of depreciation for the actual cash value payment, you can absolutely go and negotiate that. So that's one of the things that you have some leeway on.
So in these series of free classes that we offer, we follow the timeline that typically happens. We will do one of these, we'll do a webinar on getting your contents claim pulled together. We will do a webinar on making sure that the replacement cost of your home has been accurately estimated. We will be talking about, as I said earlier, what kind of grants are available, what kind of loans might be available to fill your insurance gaps. We will talk about remedying under insurance. We will have 1 or 2 of our attorney friends who have successfully and unsuccessfully fought for people to reform their policy limits to where they should have been if your home was properly insured. We understand there's a lot coming at you, so we try to provide it in bite-sized pieces. We try not to cover everything at once. So today, it was our goal to help you understand the dollars that are available to you in that policy. As we go forward, we'll be talking more in more detail about how you get those dollars. So Sandy's point about if they overly depreciated your stuff, how do you remedy that? I want to thank my team, Ben Laterno, who's recording, Val Brown, who's always making sure things are smooth, Annie, who's been on the island, and all of our partners on Maui who are keeping us informed and with whom we are communicating daily to keep tabs on what's going on. So those of you who want to participate in our clinic, that will be if you have already feel like you have a legal issue and you want to talk to a lawyer, or you feel like you have a claim problem, you want to talk to an adjuster, We will have our trained volunteers available in late November. We will be publicizing that clinic. But again, we know a lot of people have never heard of us and don't know about us. So please help spread the word. And again, mahalo for your time.
Thank you all, and good luck to you all.